Okay, it's time to start. Hello, everybody, and welcome to the first webinar of the 2018 Investor and Corporate Partner Readiness webinar series from the Northeast Clean Energy Council and Navigate NYSERDA Innovation Program. My name is Catarina Madeira. I'm the director of Navigate, and I'm here today with an outstanding panel of experts to talk about public funding to cleantech startups. This webinar series is part of NYSERDA's and the Navigate mission to support cleantech entrepreneurs and ecosystem stakeholders, such as incubators, accelerators, and other innovation organizations located across the Northeast, by providing them not only with learning opportunities and access to experts like this series, but as well with connections to investors, corporates, and customers to help them start, grow, and scale their businesses. So throughout the series, we'll talk about several aspects related to investment and to strategic partnerships. So please stay tuned, as we'll be releasing more information soon about the next sessions. Okay. This webinar series, and in fact our programs at NYSERDA, have the invaluable support of the Massachusetts Clean Energy Center, MassCEC, and NYSERDA, the New York State Energy Research and Development Authority, with whom we work very closely to design and provide tailored programs and highly vetted opportunities to the cleantech community. Our ultimate goal, at NYSERDA, is to drive innovation and accelerate the clean energy sector in the Northeast. And it is an honor to have MassCEC and NYSERDA as partners. Thank you so much to both. We are very pleased today to have with us representatives from 4 organizations that have direct and indirect funding mechanisms to support entrepreneurs. We'll hear from Nicholas Quercus from NYSERDA, Dr. Manny Oliver from the U.S. Department of Energy, Nikhil Garge from Cyclotron Road, and Tibor Todt from MassCEC. Each guest will make a brief presentation, followed by a discussion. And as always, if you want to be part of the conversation, as we'd love to, feel free to use the Q&A feature in the Zoom to send us your questions. So before passing the mic to Tibor, I'd like to kindly remind you to stay on mute to avoid any sound problem. I'd like to say as well that we are recording this session, so tomorrow we'll send you the link to our YouTube channel along with the slides. And please let us know if you have any trouble with the sound, hearing the panel, or seeing the slides. We'll do our best to solve it. And now, without further ado, it's my pleasure to hand the webinar over to Tibor Todt, Managing Director of Investments at MassCEC. Tibor, the floor is yours.
Thank you, Catarina. So it is a pleasure for me to be here today and to be moderating this panel and really distinguished panel. It is really a topic that is near and dear to my heart, because this is basically what I do all day. I represent a public source of funding that goes directly into startup companies. We'll have, as Catarina described, an opportunity for everyone on the panel to tell their story about what their organization does and how we're supporting startup companies. At MassCEC, we have a little bit of a mix or hybrid mix of grants as well as actual investments that we provide companies. I think, and I've saved myself for the end because perhaps it's somewhat the most complicated for those who aren't familiar with what we do. But we'll have a chance to since everyone's already been introduced by name, I think we'll just, in the interest of time as well, just launch right into giving each of our panelists an opportunity to go through and describe what they, a little bit about their organization and the type of funding that they provide to startup companies, and hopefully really targeting what should be the target audience here, which are startups and those who love startups and want to be part of that ecosystem to support them as well. Nick Quirquist, who runs the sort of tech to market programs at NYSERDA, will be first up on our list here. Nick?
Great, thanks, Tibor. Thanks for the introduction. Welcome to everybody on the webinar. My name is Nick Quirquist, and I lead the Technology to Market program at NYSERDA. Just have a couple slides to give folks some more background information about what we do at NYSERDA. So NYSERDA is New York State's energy innovation agency. If you could go to the next slide, please. I'm part of the innovation group at NYSERDA, and we're investing about $800 million over the next 10 years, or about $80 million per year, mostly through direct investments that we make into early stage companies, pre-Series B, through grants. A portion of that funding also goes to support assets and resources for entrepreneurs and early stage companies in New York State as well. And that's the Technology to Market program at NYSERDA really focuses on that. But just to give more detail around the investments that we're making, we typically invest anywhere from $75K for feasibility studies to over $1 million for product development or demonstration projects to demonstrate commercially available technologies or technologies that are on the cusp of being able to be deployed in the market. And we invest primarily in New York State-based companies, but we also invest in out-of-state companies that can show a strong connection to New York State or a presence here. And that could be through a project that's in New York State, or it could be through partners like some of the different tech-to-market resources that we support. So we're agnostic as far as the different sectors that we invest in, but we do focus on a few sectors specifically that we think will really help New York State meet its nation-leading energy and climate goals. Can you go to the next slide, please? So our innovation team at NYSERDA here is broken up into 5 different groups. As I mentioned, I'm with the Tech to Market team, which provides business development support and commercialization resources to folks around the state. And then we have our 4 technology groups that make investments directly in companies. And that's our advanced buildings team, our clean transportation, our renewables and energy storage team, and our smart grid team. Next slide, please. And so some of the resources that we support around the state include incubators. We have 6 incubators strategically located around the state in the major markets to serve those companies, as well as proof of concept centers or seed accelerators for companies that are very early stage, might be just intellectual property at a university or an idea on the back of a napkin. And we provide upfront funding support for customer discovery and market validation work to see if there's an actual need for that technology to be deployed in the market. And for more established companies, we provide executive mentoring programs as well to help folks with different things on technical or business type problems that they might be coming up with. And NYSERDA is also the supporter of 76 West, which is a $20 million competition that's based in New York State. And it's really meant to attract quality companies from around the state and the region to set up shop in New York State and take advantage of the various funding programs that we have, as well as these resources. So, overall, NYSERDA is really making, in this tech to market space specifically, nation-leading investments to make New York State the best place for a clean energy entrepreneur startup company to start and scale their business. And just the last slide has my coordinates. If folks on the webinar want to reach out to me directly, happy to follow up offline. And interested in hearing more about the other folks, as well as getting into the Q&A with the participants on the webinar.
Great, thank you, Nick. Really appreciate that. And again, folks can be starting to not just think about, but even send questions that during the Q&A period we'll be collating those questions. And so you'll have a chance to also as we move on from this slide, again, the slides will be shared. So there's the data and contact information that you can refer to later as well. So moving along then, I'd next like to introduce Dr. Manny Oliver, who heads the SBIR Programs Office at the Department of Energy, which is probably many folks are familiar with the SBIR program, but this represents a federal source of funding that is available to companies in our Northeast region here. Manny?
All right, thanks, Tibor. And again, there's my contact information if anybody has any follow-up questions after the meeting, if you didn't get them answered today. On the next slide, I'll just give you an overview of what we do fund. As the Department of Energy, I think as many of you expect us to fund clean energy technologies. We do also establish making some of the fossil, nuclear, and other technologies, cleaner as well. We do fund quite a bit in basic science and engineering, and in fact are the largest funder of physical sciences research in the United States. And then the third area that the department funds is nuclear security. So we do have some research in that area as well. I think most people on this call are primarily interested in the first area, and again, specific research topics we would have under our SBIR and STTR solicitations would cover that broad range, and those are listed there on the slide. So pretty much all forms of renewable energy, improved energy efficiency, both in buildings, vehicles, modernizing the grid, particularly with regard to intelligence and security on the grid, and again making fossil fuels, reducing the energy associated with extracting and converting that energy into electricity or other forms, and then finally nuclear energy. And we do have some very long-term research in fusion energy. We're looking for new ideas to help us in the implementation of that technology, which of course is much further out. The next slide talk a little bit about our operations. Those familiar with the SBIR program know that it's a phased program, so we do fund in stages. We do use solicitations or competitions, and people would submit electronic applications online. We do have external peer review process that's typically used throughout the government, and so your application would be reviewed primarily by again external experts. These might be faculty, researchers, or researchers at DOE national labs. But the ultimate decision on your application is made by Department of Energy program managers who work in the topic areas that we have. In terms of the criteria, what we would be evaluating you for would probably be the strength of your innovation. What's the fundamental idea that you have, the ability of your team to execute the research plan that you submit, and then finally, if you are successful, what's the impact of the technology that you're proposing. We go through the 3 stages that are mentioned there, and we do issue 2 solicitations a year. And these are grants. We do not take any equity in your company. We do not, ask you to pay back the grants. I would point out that our topic areas are very focused. So we don't necessarily in a given year fund anything that you might think of under solar or wind or any other form of energy. So you will have to look at our topics because of, we do attract a large number of applications every year. Typically about 1,500 just at the phase 1 level. We do make the topic areas a little more focused as a result. So phase 1 awards are shown either 150 or 225K, lasts for 6 to 12 months, and we make about 350. This year we actually make about close to 400 of those awards per year. Phase 2, once you've completed phase 1, you apply for phase 2 the following year. This is really an opportunity for you to step up and do prototype or process development and build on what on your idea in phase 1. That's up to 2 years, and we typically fund about 150 of those awards per year. And we actually do have a second or sequential phase 2 for continuing the R&D. Now about 20 to 25% of our awardees do go on for sequential phase 2. I do point out we do fund very early stage, really idea stage. And so we do focus on things that are maybe a little more disruptive, take a little more time to get to market. So we're not really, with the SBIR program, funding more later stage ideas that Nick mentioned previously. So really very early stage. Next slide. And then just some brief, suggestions if you're planning to apply for federal funding, such as the SBIR program. We know the small businesses are extremely busy, and it is a challenge sometimes when you look at a new program like this to get into the nuts and bolts of it and understand it. But if you are going to make a decision to apply, you do need to spend a little time in understanding what the department does and why we fund in these areas, so that you can really align your proposal so that it does support the mission of the Department of Energy. We are, just to be clear, we're not a sort of like a angel or VC that's very focused on your idea and how and evaluating it on its own merits. We do need to make sure that whatever idea you have fits within the mission of the Department of Energy. The other thing is, again, as I mentioned, we tend to focus on things a little more disruptive, perhaps a little further out. So do propose significant innovations. If some things are a little too incremental, they may not be considered strong enough for funding. One of the criteria is impact. So do spend some time talking about, what happens if you are successful, and particularly if, for a federal research program, we are looking to have, national impact. Again, that's getting back to the idea we want significant, advances. So do, make a good story in terms of how you're going to impact for a lot of, again, will vary by topic, but for example, energy consumption in the U.S. or reduction in CO2 emissions and so on. I would also, encourage you to, structure your team for success, both for the technical success for the work you're proposing to do and to eventually be commercially successful. Some small companies do try to sort of do it all with, the 1 or 2 person team, and it's to your advantage to, especially when you're applying for a grant where you can subcontract the work, to bring in technical experts, whether they're consultants or, university researchers, to really make your team look like it has all the right pieces in place. And then finally, don't to be discouraged if you don't win right away. These are competitive programs. Our phase 1 success rate is about 20%. So most people will not win their first time. So, and again, you will get your, reviewer comments back, and, don't be discouraged. Just you can learn and try again in the future. So I think I'll stop there. My final slide just, I think, has some contact information for us. And, please take a peek at our website. We currently don't actually have any solicitations open. Our next topics will come out in July. And I would encourage you to join our mailing list. That's right on our homepage. And when the topics come out, you get an email to and a link to that. So I'll just end right there and take questions later.
Great, thank you, Manny. And myself, and I bet Nick and Nick Hill were nodding their heads at this at your last slide there of strategies for success. I mean, I think those are good universal maxims for startups to take note. And actually, I'm going to switch, going back to this just very briefly. I mean, I think this probably applies to all of us that you talk to about getting to know the organizations and their mission and impact that they're looking for, and structure your team around that, and your pitch and proposal around that. It's all sort of really good advice, and so take it to heart for, I think, any group, and even in investors. It's a similar kind of universal strategy of getting to know your audience and their objectives to be successful with any kind of funding that you look to obtain. Thanks, Manny. So next up, finally, would like to introduce Nikhil Gargeya, who's the partnerships manager at Cyclotron Road, and a very different type of organization than I think the rest of us. So I'll let you take over from here, Nikhil.
Thank you so much, Tibor, Katerina, and NYSERDA. I think this is a really important conversation, just echoing what the other panelists mentioned. I'm just really glad to share a little bit about the program, Cyclotron Road, and kind of how that fits into the landscape of different funding mechanisms and opportunities for entrepreneurs in this area. So thanks very much for that. We can jump in right to the next slide. So I think a little bit about the background of the program of Cyclotron Road. really, when the program was founded in 2014, the goal was to say, you know, we're based out in the Bay Area in California, and when people think about innovation, they traditionally think about software, and which is great. I think it enables a lot of stuff, but the idea behind software is that there's a way that you can get to a first working prototype to go approach investors and get an idea for the feedback and whether this is a fundable business. Could you go to the next slide, please? Well, the question is, when you talk about hard tech, and this is really, I think, the focus of a lot of what we're talking today, is the question is, even getting to that first prototype is particularly difficult. And there are a number of really great funding mechanisms out there. One of our co-founders, Ilan Gur, had been a program director early on at ARPA-E. So there are certainly funding mechanisms out there, but the question is, where can you actually spend time and get the funding and the space to actually do that work? Could you go to the next slide, please? And the idea was the Cyclotron Road would be that place. So Cyclotron Road, founded in 2014, was the first entrepreneurial research fellowship. And the idea is it provides a home for entrepreneurial scientists who are looking to take their ideas from the lab benchtop scale into the market. And the goal is really to empower these innovators to advance their ideas and their concepts from a concept to a first working product. And I'll talk a little bit about how we do that. The goal of the program is really not only to provide them facilities and funding and all to get to that goal, but really to also look at what the end goal of that business looks like. So what it is that you're actually selling into the market, who's your end customer, kind of what are the price points that you're tackling, and get a really good sense of how your technology fits into that and come out with a working product. Next slide, please. A really quick look at kind of how we work on how our model works. The program is essentially a 2-year-long program, and we run it as a competition every year. So at any given time, we'll have about 2 cohorts in the program. We run it as a competition, and the first step of that is really recruiting world-class technical talent from US research universities. The goal is really to say that we need some strong technical knowledge behind the idea that's going through the program. Next, please. And what we do is we bring you here for 2 years in a residential program and provide you access to Lawrence Berkeley National Lab facilities. And to give you a quick sense of that, so Lawrence Berkeley National Lab is one of the 17 governmental labs under the Department of Energy. And to give you a sense of kind of the scale of operations, about 4,000 scientists, $850 million of annual operating budget. And the idea is you can use these facilities, and in addition to some non-dilutive capital we provide you and some intense mentorship to really advance and get to that next step. Next, please. And finally, as I mentioned, a lot of the strategic questions around when you're running a technology push program focused on very early stage technology that requires a lot of de-risking, the thing is, what does your final business look like? Where are you going to get funding from? And we're actually finding it's as we're talking about today, I mean, it's really a mix and match of a number of different sources. And our goal is to help the companies really think through that process strategically and meaningfully to get to that next step. Next, please. So a quick snapshot of how it actually works. So as I said, we run a competition every year, and our institutional sponsors, essentially, we run over about 3 tracks, sponsored by 3 institutional sponsors. One is the Department of Energy Advanced Manufacturing Office. Another is funded by California Energy Commission, along with a group of philanthropists focused on grid technologies and clean power. And DARPA is underwriting a track focused on electronics and next generation computing. As you can see there, I'll just pause and talk about kind of the technology areas. It's pretty broad. Our goal is really to say, if your idea has broad impact in decarbonization, in providing next generation power, or really looking at next generation computing, whatever it is, if you can leverage the facilities and mentorship in our program, and you bring that strong entrepreneurial bent, then I think that it's a great opportunity for you to apply and join the program. So what do the innovators actually get over that 2 years? So in the form of a fellowship, they essentially get a working stipend in the range of anywhere from $80,000 to over $100,000. And in addition, they get about $100K in additional non-dilutive research capital. And what that is for is, in addition to the space that you have at the lab and the facilities you have access to, you're able to pay for additional access to user facilities here at the lab and offsite. You get obviously access to the lab itself, to UC Berkeley, and the network that comes with that. A lot of the benefit of being here is also working with the researchers who have spent decades working on the core science understanding behind some of these topics and getting a chance to bounce ideas off with them and to understand how that space has changed over time to make sure you're running in the right direction. One thing that's unique about the program is that you can work at a national lab and collaborate with scientists, but often the IP will be held jointly between you and the lab. In our case, all of our companies retain full rights to their intellectual property through our program, which I think is pretty unique. The goal is that if you're building a commercialized business, you really need to hold your IP within that entity. From a programming standpoint, we run intensive mentorship and quarterly meetings. A lot of that is bringing in corporate partners, investors, as well as program directors from various funding agencies, since we do have a focus on non-dilutive capital, especially before you understand what your business is like. Lastly, community is very strong in what we do and is one of the largest assets. When you're working to launch a business in this area, it's really important to have a strong group of people working in and around the same topics and going through the same challenges, and it provides a great chance to get through that together. Next, please. Lastly, so I'll just say that in addition to the funding that we provide, which is on the order of our first two cohorts of, let's see, 6 and 9 companies total, we provided about $10 million through what I've mentioned, essentially the stipend and the additional research funding. But in addition to that, just being in the program and having these resources kind of brought together for you really provides a chance to catalyze additional funding from various non-dilutive and dilutive sources. So in addition to the $10 million, our companies have brought on a follow-on on the order of about $50 million over that number of companies. And as you can see, a large portion of that is non-dilutive. And here's a really quick snapshot of the sources for that non-dilutive capital. And I think it's great that we're having this discussion today too, because I think it's constantly a part of our own program, as I mentioned, to ensure that our innovators are educated about opportunities out there, the calls for grants out there, and enable them to get to that step. We do workshops in our program focused on grant writing, focused on how to position your technology to get grants and what that process looks like. We also have a number of program directors coming through our offices on a pretty regular basis to make sure that you're also understanding what the goal of the grant is. Next slide, please. And in the spirit of kind of enabling the folks on the webinar to really take that next step and go forward to get some of the funding and take advantage of the opportunity, we are recruiting our 5th cohort now. What we are looking for is essentially people with really top-notch technical backgrounds in a set of technologies. We're looking to bring some advancement in core science into the market, and having some sort of an entrepreneurial mindset to be able to push through and take that to market. The applications themselves opened in September. It's a really short application, 5-6 pages, focused on kind of your background, your vision for the technology, the impact it'll have, and why Cyclotron Road is kind of in the critical path of you taking it to market, and why it's going to be a key to helping solve bring your technology to market. What you can do now is go to our website, sign up for our newsletter at cyclotronroad.org to stay informed. It's a great way to understand kind of what our companies are doing, additional programming questions, that sort of stuff. And of course, we're having regular webinars up until the application process starts. So please do go ahead and sign up for that through our website. Up on the right-hand corner, you'll see apply, and you can go ahead and sign up for a webinar. The next one was on June 20th. And the presentation will really be similar to what I'm talking about now. It really take a lot more time for additional questions around specifically what goes on in programming, how it enables you to go to the next step, and what would make a great application. That's some questions answered there. We are also opening up in the near future a pre-application form. What that will allow you to do is, once you've kind of understood the constraints of the application program itself, you can spend some time sending us some preliminary information, and it allows us the chance to give you some brief feedback on, where we would like to maybe see more detail, even market research or some techno-economic analysis on how technology kind of fits into the market expectations. We'll provide you some feedback on that. And it's just a tool to put in as great an application as you can. So I think that's pretty much it. Thank you so much, and happy to take questions at the time appropriate.
Okay, terrific. Thank you. And so I get to be the anchor here to be last on the list. And before I sort of launch into my story here at MassCEC, I do want to just remind folks that if you have questions that you're formulating as we go through, please go ahead and use the Q&A or chat feature here to submit those questions, and then we'll look to go through after my talk is when we'll be starting to address some Q&A, and again we'll be wrapping up by 1:30. So please do, if you have a question, probably others have the same or similar question, so don't be shy about putting your questions out there, please. So Massachusetts Clean Energy Center, similar to NYSERDA, we're a quasi-public agency funded here within the state. So as I get into sort of the different types of programs that we have targeting kind of R&D and startups, I will say sort of at a high level, the key eligibility is that we're funding generally companies that are based here in Massachusetts, if it's funding going directly to the company, or maybe funding projects that are going on here in Massachusetts, if it's a demonstration project, or funding jobs here, and we have workforce programs as well. And the graphic that you see here, I mean, ultimately our mission is broad in that we see ourselves as trying to grow the clean energy industry in Massachusetts. We're trying to really support and accelerate the deployment of solutions, be helping to advance technology. Ultimately, that is helping to support the Commonwealth's climate change, environmental, and economic development goals. And we have, for startups, it's really focused on two of our divisions here that have both grant programs, non-dilutive financing, but also through my division, we're making direct investments in companies. And what you see on this slide is sort of a range of different programs that have names that will hopefully are somewhat suggestive of what they do, but I'll quickly walk through them. And I know we have want to make sure we have time for the Q&A. The programs, the boxes you see here in blue are straight grant programs. Currently nothing that has a recruitment requirement. And then the green boxes are ones where there's some form of direct investment in equity, debt, or a sort of convertible security. And that's what my team focuses on. We've got, I'll talk about it from, actually, I'll quickly page through here. All of this has, is that go forward? Okay. I'll leave these behind. Obviously, you'll get copies of the slides. But we are working, our internship program is our most popular program in that we provide reimbursement of college and recent graduates as interns in startup as well as larger companies and provides really critical both subsidizing the costs of that, as well as providing up to 3 additional staff, which can be very critical for startups. And we do 3 cycles throughout the year. We have cumulatively funded almost 2,500 interns, hundreds every year, hundreds of companies that participated in this. And we do 3 seasons a year: spring, summer, fall, full-time in the summer and part-time in the spring and fall. Our Catalyst program is our earliest program, really funding $65,000 proof of concept projects, grants rather, for proof of concept projects. We'll do 14 of those projects a year. We've been doing this since 2010 and have funded, at this point, I think around 80 projects that have gone on to raise over $150 million in subsequent financing, both grants and investments. And this has been a great source of advancing technology and often feeding that into future programs of ours as well. Amplify Mass partners nicely with DOE and other federal agencies and organizations that are giving grants to startup companies where we provide a essentially matching grant or additional, it can either be filling a cost share or providing some additional scope on the project. And that has been in the range of $5,000 to $500,000 for both companies and research teams, universities. And that is on a rolling application basis. Our Innovate Mass program is sort of the next stage of supporting technology demonstration. And so we will fund up to $250,000 per project with a cost share requirement or matching funds requirement up to provide from the company, either in kind or from partners in kind, 50% of what we're funding. And this is for a commercial scale demonstration project of a technology at a higher TRL. And this we will have done sort of 5 to 10 projects like this a year on this basis, always with projects, either companies based in Massachusetts or projects based here in Massachusetts with a customer site or a partner. Deploy Mass is the last of our sort of grant programs that I'm featuring, and this is to help transition technologies that are now commercially ready and looking for the first customers, early adopters. And so we provide vetting of the technology, and on a case-by-case basis, we can provide feasibility financing, or even buy down the cost for a customer to be that early adopter, and targeting only public entities, so state, municipal, and other public entities within Massachusetts. Accelerate Mass is the first of our sort of investment programs. It's really a seed investment program targeted at companies that are coming out of accelerator programs. We make a convertible note investment. We've been targeting 3 to 5 companies per year, and really companies that come out of accelerator programs that we have vetted, but they don't necessarily have to be just in Massachusetts. And so this can also be, but they need to be in Massachusetts to accept the funding. So this can help transition companies that are coming out of the accelerator looking to get established into the Massachusetts ecosystem, and can take funding of up to $150,000 in this convertible note to continue the momentum and achievement of milestones coming out of the accelerator program and reach sort of the next commercial, as well as fundraising milestones that often we look to participate as a normal equity investor in companies as they get ready for, let's say, often the Series A equity round, which is after that, which segues nicely into where we spend a lot of our time really is in our kind of equity investment program, typically around the Series A, late seed, Series A, but often also bridging to either to that A round or to a B round thereafter. We can lead smaller rounds. We participate in larger rounds, typically equity rounds of $1 to $5 million, where we would invest on average $500,000 to $600,000. alongside other investors. These companies that we've invested in today, we've built a portfolio, in the equity portfolio of 28 companies. We are very active investors looking to be connectors, advisors, cheerleaders, and whatever support we can, connecting those companies to additional financing, but also customers, strategic partners, and the like. And this is also on a rolling basis where we are constantly out there trying to get to know impactful companies and be able to invest and work with those companies. This is just a quick snapshot of our portfolio today. We also have, and this includes companies across both Accelerate Mass, and so this is our investment portfolio, so the Accelerate Mass equity. And I didn't talk about, we also occasionally will make venture debt investments, companies that are generating revenue, scaling up, and need working capital financing, and we can make loans up to $1 million for companies at that stage. And then here, sort of the distinction between sort of the investment programs in green and the grant programs in blue. And feel free to reach out by email, and we can help direct you to the right teams for each of those types of programs. What's next on the slide is me. So I think now we're up to being ready for Q&A. And I think we have a first question here. And if we have time, I have actually other questions for folks on the panel myself. But the first question is from Ryan Mintosh, who wanted to ask about if someone could talk about startup companies that are currently based out of state, but would plan to relocate to, it says New York State, and so maybe this is directly asking for Nick here, and eligibility requirements for the various New York State grant programs through NYSERDA and the organizations that you support. So Nick, if you could address sort of how you interact with companies that are startups that are currently based outside of the state.
Sure, absolutely. And thanks for the question, Ryan. We don't have hard and fast rules or requirements as far as employee headcount like some economic development organizations do. So we wouldn't require like 51% of your headcount to be in New York State. We realize that early stage companies might need to have a presence in multiple states. We work closely with Tibor and his team at MassCEC, but we could be doing that more and working more closely with them. So we're happy to work with companies that have a footprint in multiple states. But what they do need to do as far as eligibility, and we leave it open-ended and flexible on purpose to keep our options open. But the company does need to demonstrate a connection to New York State, and that might be through the project that they're doing is cited in the state. They could be working with one or more of our different tech-to-market assets that I highlighted on the map of New York State. They could have customers or supply chain partners in the state or other things. So that's really how we look at it. We're not really restrictive in terms of companies wanting to either relocate to New York State or expand their presence and move into New York State.
Excellent. Thank you, Nick. And I wasn't asked about Massachusetts, but we also love to work with out-of-state startups. And we have sort of a definition of sort of material presence. Again, for an equity investment, you really need to be based here in Massachusetts, but some of our other programs, and I mentioned how the Accelerate Mass, we definitely reach out to companies going through accelerators from outside the state and look to provide sort of onboarding into and funding that get them to come here and establish themselves here. And there is a very rich ecosystem of incubators like Greentown Labs and accelerator programs that like Cleantech Open and Mass Challenge, where companies can have an opportunity to work here and establish themselves here and get connected into the local ecosystem. And always happy to take questions on that from out-of-state companies. The next question is from Dolan for Manny, and really asking for the DOE whether you have to start, and I'm sure you've had this question before, Manny, whether you have to start at phase 1 to be considered for later phases. So can you do a phase 2 without having done a phase 1?
Yeah, so the direct answer to that question is no. It is a phased program. Congress has looked at providing what's called direct to phase 2 capability, and they did pilot that with a couple of the agencies like Department of Defense and NIH. There's been some draft legislation, but none of it has passed yet about expanding that to other agencies. But at the present time for DOE, we don't have the ability to sort of skip phase 1 and go to phase 2.
Okay, thank you, Manny. We do have a question from from Ravish about he's a founder of a company in the recycling space, and asked if any of our, really for any of the panelists, but and maybe it's an opportunity for everybody just to very briefly mention, whether not just you address the recycling space, but if I can maybe just run down the list, how do you define what is the sort of scope of technologies that you like to support, and in particular whether it includes recycling, but maybe more broadly than that, and if just in a short minute or two, I'm going to just run through each of you to kind of go back through. I mean, and I'll just start at the top with Nick. What are the sort of, does recycling apply to your strategy, and otherwise, how do you define kind of the space that you operate in?
Sure. So we in all of our solicitations are called program opportunity notices, or PONs. You might have heard of like FOAs from the DOE, but we call them PONs. Same exact thing. It's our competitive solicitations. We always put our definition of energy in there, and it's like a paragraph, so I'm not going to read it to you, but basically anything that's going to have an impact on New York State's energy sector kind of fits on that. And we obviously provide more weight to companies or technologies that will have a greater impact. I mentioned the 4 technical groups that we have that focus on buildings, transportation, grid, and renewables and energy storage. We have a rolling funding opportunity. It's PON 3249. It's called Advancing Clean Energy Exploratory Research Funding. And this was really an answer to all the folks who had really good ideas or technologies that didn't fit neatly into those 4 buckets that I just mentioned. And so that would be a technology or a space that we would be interested in looking at through this specific rolling solicitation, PON 3249. And I would, encourage you to take a look at that opportunity.
Manny, you also talked a bit about your process and that you do targeted solicitations. Is there anything that you'd want to add to that, both whether recycling falls into some of the strategies of what DOE wants to support, or other guidance around kind of what is impactful to you from a technology standpoint?
Yeah, as I mentioned earlier, so we don't have sort of broad open topics. Our program managers are active in funding R&D in all of these areas that we fund, and so they can see where the roadblocks are, and so we tend to focus our topics in some of those critical roadblock areas, as opposed to being wide open. With regard to recycling, we would not have a topic that was labeled recycling as a program area. You'd probably have to look to see if we do look at certain, from an energy impact point of view. So something related to recycling and manufacturing in terms of how do we lower energy costs in manufacturing, through recycling, and that might be, very industry specific. May show up also, for example, in our biofuels area, that we do, take waste and all, types of waste, not just crop waste, but also things like organic waste streams, such as sewage, and look at that as a potential, source of energy. So nothing, and even other areas like critical materials, like rare earth elements, and occasionally we have topics in those areas looking for more innovative ways to recover some of those materials as opposed to having to mine them. So it'll be sort of hit and miss as any of those particular areas, but there are opportunities there, but not necessarily in a sort of a broader recycling category.
Right. Okay, thank you. And maybe I'll jump in for MassCEC. our definition of clean energy is significantly reducing the use of fossil fuels and really looking at it either through alternative sources of energy or through energy conservation and efficiency. And we have enabling legislation that spells out lots of different categories. It really is generated, or our organization was created during by Green Jobs Act and Global Solutions Warming Act as sort of a follow-up to those initiatives here in Massachusetts. So it really is around climate change and greenhouse gas emissions as well. And so whenever we look at any type of company, we're always trying to have some sort of measure or metric on what is the energy impact of that, whether it's in terms of emissions or kilowatt hours of alternative energy or storage, or through savings of energy. And even when we look at things like recycling or HVAC technologies or other technologies, we try to put things in sort of similar terms. So recycling could potentially be something that, not by itself as recycling is interesting for us, but to the extent that it is offsetting and driven by avoiding some other energy recycling, presumably, especially if it's metal recycling or things like that. Glass recycling can be very energy intensive activities. There are opportunities within recycling. The key, but not directly in itself. The key themes that we're focused on today are around sort of next-gen renewables, driving down costs and increasing efficiency and control and different renewable energy technologies, grid resilience, particularly around grid edge and energy storage, clean transportation or efficient mobility, as we like to refer to it. And then water energy nexus is an area that we spend a lot of time finding energy intensive opportunities there. So, recycling, climate change, I think is ultimately the core of why we care about this stuff. But it for us, and I think others have already addressed kind of what their criteria are on that. I think we have a couple more minutes. I don't know if there's.
Hi, Tibor. I can also jump in here.
Yeah, sorry.
Yeah, no problem. I just wanted to echo what everyone has mentioned so far, that I would say, first of all, the Cyclotron Road, while very specifically may not list recycling, I think wherever reuse of industrial materials or flue gases, one of our companies, Opus 12, is essentially using carbon dioxide from industrial processes and kind of using that directly to create high value chemicals. So wherever you're kind of reusing existing materials, that's something that we would be interested in, so long as you're kind of moving the needle for those industries. A lot of our companies in the application process, some have looked at water sanitation and being able to repurpose use of water that's been used for fracking for other purposes and things like that. And also recyclability, I think, factors into what a couple of our companies do, where a material is able to be easily kind of reconstituted for use again. That's a thing where a lot of our companies innovate in as well. And that's really a part of the process of some of their innovations. But it kind of feeds into the goal of having that large impact on industry.
Terrific. Thank you. I guess one thing that we talked a bit about for all of you, sort of what is it you're looking for and what do companies need to do to be successful. And if in a couple minutes that we have left, let me ask each of you just very briefly, what is a common misconception or mistake that entrepreneurs make when trying to apply for funding from you? If like one example or one point you'd like to make, if there's one point I asked you to make, what might that be? So starting, maybe in reverse order this time, Nikhil, do have a sense of like, what is it that folks get wrong when they come to you or to participate in your program?
Sure, absolutely. You know, the funny thing is, I think we are, as a program, we're very early stage, I think, in line with some of the other folks on the panel here. But from a program or like incubator accelerator function, I think the one large mistake we see folks making is they actually think that they're either too early for us, or so that's one thing. And the second thing is sometimes people approach us and we're actually telling them that perhaps you're actually a little further along than what our program focuses on. So I think that's something to mention. We are almost pre-incubator stage. So wherever you have a concept where there's a lot of technical merit, but you need the time to figure out what the fit for market is, I think that's a sweet spot for us.
Right.
So don't be shy about applying early.
Okay, great. Manny, is there anything you'd like to throw in there? And I know you had a pretty detailed page in your presentation.
Yeah, gosh, there are so many things. I guess maybe more as an incentive, because I think, you know, there is always this impression that applying for money from the federal government, I'm going to run into some bureaucracy, and I would like to tell you that's not true, but the reality is, yeah, there is some, you know, there are hurdles you're going to have to go through. You're going to have to do registrations, you know, to register your business with the federal government in order to receive money before you even apply to us. And then you will have to submit an application online. And so there is a little bureaucracy, but I guess as an incentive to go through that process, I would indicate, again, you really have about a 20% chance. Your chances are higher, of course, you submit a great proposal, of winning a Phase 1 award. So even though it's still 1 in 5, I would point out that half of our Phase 1s go on to Phase 2. So also think about it in those terms that, you know, it is a very powerful way for you to move a technology forward from the idea stage. You do have to invest some time, as I mentioned, to understand the program and then to submit an application. But I think it is quite a unique enabler because, again, it's non-dilutive and
right.
And people should you know, give it serious consideration.
Great, thank you, Manny. Nick, do you have any last words on this topic?
Yeah, just super quick. I loved Manny's slide on that. I thought it was a really good idea to include that. My advice to everybody on the call, just answer what we ask for in the solicitation. Don't repurpose stuff that you've used before. Just answer the question succinctly and directly, and don't put in a bunch of filler. That's my advice.
Terrific, Nick. And maybe my addition, and agree with everything folks have said, is, you know, building on what Manny said about getting to know the organization and its goals, and is really, for us, it's really important that on the one hand, that you've really clearly identified and articulated what is that problem that you're trying to solve, that there's a real meaningful problem, an impactful problem that you're trying to address with your technology or service or business. And that in order for us to articulate that impact, really think through what is the impact towards our goals of clean energy, and somehow putting it in some frame that, especially if your business doesn't look like an energy company, but it's really more of a benefit of your technology through efficiency or something else. What are the energy impact? What is the clean energy impact? And be prepared to sort of talk through that and how success of the business is growing that clean energy impact. And that's also kind of really key and important for us, that a lot of entrepreneurs come in and haven't really quantified or articulated that very well. And that's always very important for us, and probably for others that you talk to that are sort of mission oriented. So thank you very much. I'll hand this back to Katarina to close out here, but really want to thank, on my behalf, thank the panel who did a terrific job, and appreciate you taking the time and having the conversation with me about this, and hope that folks in the on the line enjoyed this, and look forward to engaging with folks who are interested in what's going on here in Massachusetts in the future.
Thank you, Tibor. And thank you very much to our panelists and moderator as well for the great webinar and the discussion. Thank you all of you for joining us today. We hope this was a valuable session for everyone, and again to our sponsors, both MassCEC and NYSERDA. As mentioned in the beginning in the webinar, I'll send the recording and the slides tomorrow, and I hope to see you soon in our next webinars. The next one will be in July and the other one in September. Thanks everyone, and have a great day.